Nice, nice. Well, I'm excited, Matt. You got a few. The challenge on a week or a day like this is like Netflix, for example. That pullback was there, and now it's become the breakout, right? So when you see a lot of
Yeah.
movement, it does, kind of. I should have. Hopefully, I'm already there, but if I'm not, maybe you are looking at more of a back of the week on some of those names. But there's always somebody, right? There's always somebody. I'm going to go with two bulls and a bear today, Maddie. I don't know what your game plan is, but you know what? I'm gonna kick us off with a bull while you think about it.
I'm definitely two bulls and a bear. Yeah, I'm two bulls bear.
Two bulls and a bear. All
Mhm.
right. So I got a high base for you, and I got a little retracement for you. Where you want to
Mm.
start?
I got a retracement and I got a break as well. Why don't we do our retracements first? Let's do our bullish retracements, then we'll do our bears, then we'll do because are you two bulls and a bear too, right?
Yeah,
Did I
two
hear?
bulls. Yeah,
And
two bulls and a bear that
what's
I don't
your
think will trigger, but I do
do you,
like it if it does.
do you have you have a retracement
A
on the bull
retracement, a
and a breakout?
breakout, and a bear. Yeah. So you want to
Okay.
kick off with the
Let's
retracements?
let's do retracements. You go first.
All right. You know what? This is a name we talked about a few weeks back, and that's CSGP, CoStar Group. Had this on
CS
that.
Geno Paul.
Yep,
Okay.
CS Geno 4. Remember, we had this a few weeks ago. I can't remember exactly. It was probably 3-ish weeks ago that we talked about it. Had the big pop, the nice pullback, found support, rallied up, created a higher, high, and it worked into that $80 range. And I remember you and I were talking about it, kind of looking at that 80, and is like that's kind of as far as you can maybe hope to go off of this. There's some good history there. No surprise that we sold off from that. But that pullback, that sell-off has presented, I believe, an interesting opportunity for us here. You're starting to see the stabilization. It makes sense to me, at least, why it kind of sold off in the ballpark it did. I mean, it was a pretty good run, right? These guys can definitely move. That is for sure. You've got 80 still as a potential target, but this time I think, it's target one, whereas last time when we were talking about this, it was, an aggressive target two. This really opens up beyond that 80 though. I mean, you open
Mhm.
up into that 84, maybe 85 range. I'm going to call it 84 though. Err on the conservative side. So you do end up having a situation where, this time, if we can get through 80, which is a very sensible target one, 84, is something I think is very doable. You're starting to see the bull step back in today. Going to need some, this one's fairly straightforward in the sense of how do you get in? You're kind of looking at taking out today's high on Tuesday, right?
Yeah.
For confirmation of that. Maybe it wants to pull back a little bit deeper into that 20. I would rather it didn't, but that would probably be okay if it did, if it remained orderly. But kind of hoping that we see this situation develop early next week. The trigger, I think, is above today's high, but if you want to be a little bit more conservative and not have to spend a lot of more money, I don't have any issue going to yesterday's high.
Yeah.
I think that
And I
would
think
be
you
an
can pay
okay.
for it and be fine.
Well, it doesn't.
Um,
What it cost you a couple pennies, right?
yeah,
It's
like
if
easy.
it was $1, no. If it was 57 cents, probably not. But I mean,
A
we're
few
looking at
pennies for
we're looking
additional
at like
probability. Yeah.
18 cents on this. Assuming wherever we're getting in, I like yesterday's high upon that evaluation. It just doesn't cost me much, and I do think it gives me a little bit extra confirmation. Assuming we get that stop, we'll go below today's low, right? Kind of making the
Yeah.
assumption that that's the beginning of the pivot there. I do think you target into 80 for T1, which, is, a base hit. It's, going to put you right about 1-to-1, maybe a little bit north of it, but nothing to write home about. I think where this one really is interesting is if we break through that 80, we get into a window into that 84, which, puts us at 3.5-to-1. We could also look at this as a scale in scenario to the breakout where, we move into half of the trade, here with the intention of adding on the
Yeah.
$80 or approximately $80 break. That could be sensible. I'll never have any issue with that. But I like the pullback. I like the nature. I like the overall move that we've been seeing. I think 80 is a very achievable goal. I think T1's really, really easy. And I think T2 is really exciting if we can get through T1, really stands out to me. So that's why I decided to go with these guys. I was eyeballing another one, but I feel like these guys present a better risk to reward and a cleaner entry going into early next week.
You know, pattern recognition is a very important concept in technical analysis, and some patterns are really, really easy to spot. Others can be a little bit more difficult to spot, but patterns are what determines the probability. That's why we constantly talk about pattern recognition. I mean, I would say 70% of the halftime report is all is us just talking
Yeah.
about pattern recognition. And when you're looking at pattern recognition on this specific chart here, it doesn't stand out to you. But when you actually look into it, the detail, it's actually fairly consistent here. The reason it doesn't look that way is earnings blew it up a little bit, right? You had a really positive response on earnings. It drives about 7-8 points up before it gets overextended. Snapback retracement comes back into the 9 EMA, drives back up. Now, you see this environment moving 7-8 points. Well, from this support level to that resistance is another 7 points. And so you find support at the 9 EMA, it drives up to 80, another 7 points. Very similar movement here before it gets technically overextended. Retracement comes back into the 9 EMA. Technically speaking, you can expect about 6 to 7 points here from support to resistance is what the personality of this stock typically does. I'm negating a little bit of the earnings love in that just because I'm going to take that into account. So you can expect about 7-8 point movement here against support before it gets into what you would technically consider overextended based on the behavioral analysis of the stock. So you're very consistent against the 9 EMA, and you're also consistent against your support to resistance behavioral analysis, otherwise known as yield, potential average yield. There's a few different ways that we can categorize what I just did. If you look at it from that perspective, coming from like 77.5, Frankie, it could certainly get up into that 84 handle. In fact, I would say 84 would be that standard move in this stock, getting up into 84. Love the call out at 80. It's an old resistance. And you know what? If it's just one tap here, you might discount it a little bit. There's evidence over here though that kind of confirms it. So I love the call out at 80 T1, 84 T2. That's a very technically oriented trade there, Frankie. I like it. I don't like it as much as the one I'm gonna do right now, though.
Okay.
And I don't think I think you agree with what I just said, because you had this one written down as well, and you kind of gave me it when we were debating it. So I appreciate that one, Frankie. I'm gonna go with Live Nation here, LYV. Really
nice.
Good earnings report last time. Good pump up action. Got a secondary set up right here against the high base, broke out of that high base, established a clear momentum trend all the way up into 85. And when you have a momentum trend, you know what we're going to call for. Give us that 9 EMA test. Give us a high base. Give us a flag. We don't care. High base, we're going to look at the breakout. Flag, we're going to look at playing underneath the breakout channel. And now you're coming back down into that support level. And now you have confirmation. Jesse Livermore said, do not act without confirmation, because confirmation is the insurance that you are right on your projection. If you're projecting that the momentum of Live Nation is accurate and you're saying that the 9 EMA is support, well, today's candle would be confirmation of that analysis, which means the entry would simply be above today's high. You don't have to get too overtly complicated here on entry. You're dealing with the confirmation candle. Entry's right above the high of that candle. If you wanted to get a little bit, you could drop it down into an intraday channel to find wherever that real level is, but we're talking pennies here. Like, it's nothing. Stop loss in this environment would have to go underneath the support bounce. Now, one wick versus two bodies, I'll choose the two bodies.
Yes.
2 wicks, I can't not see 2 wicks, Frankie. I just can't. I will always see 2 wicks, because 2 wicks is not you and I putting that in. 2 wicks is algorithms putting that in. And so you got 2 wicks here right underneath, right north of, like, in that 81 handle. So I would just say stop loss underneath 81, entry above the high here. And then targeting, I think you can easily just target in the 85 range, kind of what you did on your flag, just target that previous level resistance as T1. You come out here a little bit, Frankie, and it does open up here, Frankie. It opens up all the way into 93 here. You do have 90, which is one of those whole numbers that certainly does attract a little bit of decision making. And if you do get that 90 handle, this is a beautiful trade. So it doesn't even have to get into that overhead resistance at 93. I'm just going to call for a conservative target, T1 at 85. Secondary target, I'm going to say 90 here on a breakout because it cleans up a little bit on that 85 breakout. What are your thoughts here on Live Nation?
Yeah, you know that I'm going to be on board with it. I actually cut Frank's charts early this morning, and so it's already hit that trigger. The only place I was different than you is I did target 88 instead of 90, but again, you're splitting hairs there. Right. But really like it. I think you've got the confirmation. I agree with you. Over today's high is a good place to just look for that follow through confirmation. 100%. Yes.
Awesome. All right. We got bears.
All right. We're going bears. Okay.
Yeah. Let's go bull, bear, bull. So retracements, then our bears, and then whatever you have for the third one.
All right. I'm with you there.
What do you got?
Okay. I'm looking at Williams-Sonoma, WSM.
I was looking at them earlier today. 110 breaks good.
Pretty nice on that 110 break. Sometimes when you like breakouts, especially long-term, when you find these long-term consolidation, lot of history, whether it's a breakout or a breakdown, you quickly start to realize that there's a good chance it doesn't break, right? Because that price, holds it up.
There for a reason.
It's there for a reason. And if, it almost feels to me like, I don't think this one's gonna break, but if it does, right, type of scenario, because you're spot on, that 110 break, and I think that's what we can call it as far as where the actual break is below 110. We can split a little bit of hairs there, but it's definitely in that ballpark. It's a quick trip to that 101, that low from last year around this time, right? That was only one data point, but it was a significant move off of that data point. So I think that very sensible for our first window, whether that's T1 or T2. I think you can, make it either, to be honest with you. But I do think you're looking at, so I'm just going to call it 101. Obviously you got that big $100 number right below that. If that gives, there's nothing to 90, nothing on the daily, nothing on the weekly, nothing on the monthly. You have absolutely nothing to hold this thing up if that 100-101 zone does falter. Again, that's a respectable level to be watching. So I'm not saying it is going to break there. I'm saying if it does, that's another big window for us to fill. So I think you're looking at this below 110, targeting into 101, 101.50, just getting out right around those lows. With at least a scale out. That might be your T2, and I think you could probably make that work. Obviously everyone's going to be a little different in how they, put stops on breakdowns, but the one thing we know for sure is that stop's going to be above the breakdown channel. A lot of us are going to anchor to the 90 MA if that makes sense from a risk to reward. But at 101, if that's my T1, definitely a scale for me, because I'm not going to be surprised if that support level holds, but I would like to leave a little open if we do break, because there is big upside if it does take out that last line in the sand. There's just nothing to 90. There's nothing.
You take our retracements we just looked at. Both of us had T1 at the previous level of resistance, and neither one said it was a scale out at that level.
Yeah,
it's a decision at that level. Because you got a bullish uptrend, and a bullish uptrend constantly breaks resistance.
Yeah, you might scale, but you might not, right?
Right. But you said here on Williams, I am absolutely scaling at 100. What was the difference for you? Because I know the answer, but I'm sure others might want to get the detail. What was the difference for you going into this analysis on Williams break, where you like at T1, I'm absolutely scaling out at T1 versus when you were looking at the retracement, it wasn't part of the initial analysis?
I mean, I think it's probably twofold in this. Number one, the big round number, right? That's got to stand out, right? That's I don't know if that's number
$100.
That's probably number two, but I'll lead in with that. The other one is the violent reversal that we saw off of that. We saw
right here.
When we saw buyers come in off of that, they didn't just trickle in, right? I mean, they bought,
They pounded.
and they pounded the table. And so the movement that we've seen off of that 101 has been very significant. We don't have a ton of history there, but the history that we do have, man, I wish I could go back in time and buy it at 101 there because it would have been a really fun time to be having. And so I just expect that might be a difficult break, right? That's a big 1-2 punch in my opinion. And if
you anticipate a little bit of a battle. Right.
Yeah. If somebody had a buy order there, I mean, I wouldn't have it, but I'd understand where they were coming from.
I wouldn't be shocked.
Right. I wouldn't be there with them, at least sight unseen. But
if they had a buy order at 99, you'd be a little shocked.
I'd be like, why you got a buy order at 99? Right.
Yeah,
exactly. So yeah, that's kind of where my head is in that regard.
And if I can just add one point to that, it's the single data point versus a multiple time frame data point as well. When you're looking at just a single resistance area against the backdrop of a bullish uptrend, we don't really care about that. It's because, again, uptrends constantly break resistance.
Yeah.
But if you have that same resistance level that 6 months ago stopped this stock on a dime, like you might want to take into that a little bit more consideration. So I think it's and again, you didn't label it multiple time frame, but you kind of hinted at the multiple time frame scenario as well. Appreciate your thoughts there, Frankie. I got a break too.
Oh,
you know what I got?
What are you going with?
I got $100 break. That's what I got.
All right.
So this is Williams in
down the road. Yeah.
In a week, 2 weeks from now, right? And I got Wynn Resorts here.
Ooh, it's ugly.
It's ugly. It's ugly, and it can get a little bit uglier. But what I like about this one here is it's a simple trade. It's a simple trade for the bear heart. You got a big move down on the price. You're coming through consolidation, which this is a reversal pattern on the top side. So strong bullish uptrend, short-term consolidation, double top, double bottom. Violation of support looks pretty ugly from a reversal perspective. And so you got a reversal pattern at the top end of the trend. You then drive underneath that reversal pattern. And over the last 3 days, you consolidate. And again, secondary pattern after an overextended situation, you consolidate right at $100. And Frankie, like you just said on Williams, I understand if somebody wanted to buy Wynn at $100. I do. I understand that. I do not understand anybody that wants to buy Wynn at $99.50. Yeah, I don't understand that one. And to the new trader, you might be like, well, why? That's 50 cents. Well, that 50 cents means you are breaking support. That's the difference here. And so you got that price just clinging to that $100 price threshold. You break this down on an intraday chart, and you just see it here, Frankie. Look at it just screaming down, just getting absolutely pummeled, smashed, and then 4 consecutive bars right there, 9 cents above $100, Frankie. That's a battle, right? Now, in this neutrality right here, that's not, we don't want to play in that. We don't want to play in that because once like we just said, I understand a buyer coming in above $100 and saying, I like Wynn. I got a fundamental viewpoint on Wynn, whatever their logic is, right? I can understand that. I can understand day traders coming in and being like, okay, overextended situation. Let's work that out into some neutrality. And then let's see if we can get that nice little breakout. So I can understand a lot of situations that happen between $100 and 103. I can. What I cannot understand is if any buyer wants to buy Wynn if it breaks $100, because technically then everything you're saying here is now violated. And so you just open it up a little bit. So I think it's a pretty simple, pretty clean trade, quite frankly.
Yeah, it is.
You're just playing the ranges on the intraday chart here. You're saying, let me get an entry underneath $100. Stop loss, I think you can go above 103 here, Frankie, and be just fine. But if you want to gauge the 9, You're going to have to wait for it to catch up a little bit. It's at 104.20. That shouldn't be too long, quite frankly. Another give one down day and you're underneath that 9 EMA, for example. And so that 9 EMA is certainly going to be a gauge, and we can certainly consolidate for a couple more days and let that 9 EMA catch up really, really, really nicely here. Entry underneath 100, stop loss above the resistance channel against the low base. I'm putting that right there at 103. And then from a targeting perspective, I think it's easy as well. I really do. I think this trade's easy. I think you're targeting the 200-day period moving average on the weekly chart right there at 95. You bring that out to the daily chart. You see 95 right here. There's nothing on the daily chart. So you're looking at that on the weekly chart. That 200 period moving average on the weekly chart would be T1 at 95. And then you open up a little bit down to $90 here, which is slightly north of the 200. And then you got that tap here, resistance right there around 90 as well. So I think you're pretty simple trade here. Underneath 100, stop above 103, targeting 95 by 90.
Love it. Love it. Very clean. Very good find. Very good find for the Bears.
I like to give the Bears a little bit of something.
Yeah, you did. Gave them a little something.
I got to offset Mark's bearishness.
There you go.
I like tactical bearishness. I do. If you're looking for some bear delta,
I still think, I mean, you might be skewed a little bit more to the bull side than you were a week or two ago, but you're not a raging bull, if you're me at least, right? So
none of us are raging bulls. No,
all the sectors have to line up for that to be the case. So I still think you need a couple bears in your watch list. That's a good one. Good find. All right, so let's wrap her up with a bull here.
What do you got?
I got a few options, but I think I'm going to go with I. Another good ticker symbol for the list of good ticker symbols.
It is a good ticker.
National Vision.
I is a good ticker.
It is exactly what you think it is, right? So
no, they're not. Until they put AI in their headline.
Well, yes. Well, maybe.
But as of right now, it's pretty simple. Go ahead.
Pretty straightforward, right? You got a nice little high base developing with that 9 bringing us through here. Nice little entry, over today's high. Or again, if you want to pay a little bit, take the high water mark out at 95, 93. I think that's what we were on Tuesday. I think you can go in above today's high, but either of them will make some sense from an entry point of view. These guys are from a price point of view, they don't really have a lot. They got room to run. From a moving average point of view, you've got yourselves the weekly 20 at about just shy of 28, which is going to be where T1's going to be. Yeah. And then you got the monthly 9 right around $30, which is right around that old price range, which is also $30. And you and I, know what we think about 30 as a secondary target. I don't think, on the daily, I think you could target to 32. But when you factor in the 20 weekly and the 9 monthly, unless you're willing to sit through some pullbacks and kind of put this maybe into the more position type of trade analysis, which, I think you probably could if you were inclined to do so. But from a swing, more of a trading perspective, I think you're looking at about 27.75 for T1 and right around 30 for T2. Stop loss just a little bit below the base. This is one of those trades that's going to be right on the threshold of 2-to-1 going into that 20 weekly, which is good because I think there's a good chance the 20 weekly holds, right? Yeah. And so, but if it does break and is able to get through that, then, all of a sudden we're at a, 4-to-1 risk to reward type of scenario. So I think risk to reward plays here. I think the pattern's pretty clean. The stop loss is pretty easy. I would go below the base, but you could probably make an argument at least to go below today's low because that gives you the low point and the 9 EMA if you wanted to tighten that stop loss up just a little bit. But I like that we're working in a little bit of space here. I think it's a pretty clean entry as well and a really cool ticker symbol. So that's why I settled in on I as my last call here.
Simple trade again, just a really simple trade. You're above the base on the entry, underneath the base on the stop loss. You got the 9 EMA to help you on the management of the stop loss. Really appreciate that find there, Frankie. Mine's not going to be as clean, and it might be a little bit of a radar candidate, just a little bit.
Okay. Yeah, they're definitely one of those.
I want to get your take on this one because I had a bearish reversal in my bear pick with Win. Obviously had a momentum trade on the retracement of Las Vegas Sands for my first one.
Or Live Nation, right?
For Live
Oh, pairs
Nation.
trade, Fraser. That's bold.
um, I'm looking bullish reversal here.
Okay.
Which means it's not tech. It's not. It's
It's not tech. It's not tech.
It's not tech. It's probably not comms. And cyclical needs a moment, so it's not cyclical. And defensive is out of favor. It's not defensive. I'm gonna go discretionary here, Frankie.
Okay.
I like discretionary. I think discretionary has the ability to catch up a little bit here against what's happening, specifically with comms. Maybe not tech. Like nobody might be catching tech in this year, but I want to get your take on it. Now, the first stock I'm going to pull up is Lucid. Now, my pick isn't Lucid, but just wanted to bring it up. Starting to show some significant time consolidation here.
Yeah.
Okay. And that time consolidation is important because it allows these longer duration moving averages that are very important, but we don't track all the time, like the 50 daily, the 200 daily, and whatnot. Allow that 50 period to kind of get underneath the price. And now you're looking at a little bit of a more open air. And what that time consolidation also does is it allows these weekly charts to consolidate as well. Now, my pick isn't Lucid, but the one I want to put on the radar is Rivian here, Frankie.
Ooh, all right.
RIVN. And what I like about Rivian here is it's not one of those stocks. Don't get me wrong. It's a growth stock. It's a debt-driven growth stock. But I kind of like the news that came out on Tesla and Ford earlier this week. Tesla and Ford, they held a joint session, one of those Twitter spaces where they were talking about how Tesla, which just has leadership on all batteries everywhere, how Ford can start using their charging stations. And so you got a little bit of EV love coming into the market right now. Tesla's starting to perform a little bit here. And again, I didn't love anything working underneath that 200 because it was just so tight against that. But I know Mark's been lobbing stuff from a cash flow perspective on Tesla. I kind of like Tesla above 200 as well there. But on Rivian here, it's more of that standard bullish reversal type pattern. Where and the story isn't as easily understood on the daily chart as it is on the weekly chart. But again, same conversation on Lucid, where you had that time consolidation, allowing these longer duration moving averages to catch up against the price action. Well, you come out here to a weekly chart here, Frankie, and I'm going to scale in because, again, Rivian was way high and now it's way low. And so I kind of feel like the hate might be going a little bit too far here. And what you see on the weekly chart is you see slowing momentum in trend, number one. Number two, and the slowing momentum is from this. I'll just draw your boxes to make it easy. You have that box, you have that box, and then you have that box. That's slowing momentum in trend. Mm-hmm. And then you work out this double bottom analysis right there. You work out, let me erase my other boxes there so it's a little easier here. And then you work out this double bottom analysis right into there, and this double top analysis right into there. And so you're working into what's called a W formation here, a double bottom, double top. And again, unless the company's going bankrupt, which I don't think Rivian is, but unless the company's going bankrupt, it's just one of those situations where a lot of times hate gets too far, where everybody's off it and then it stabilizes and it gives an opportunity here coming from the low point. And so I like the double bottom. I like the double top. And what else? What I like about it is, once again, those longer duration moving averages, because the time consolidation has allowed that 20 period weekly moving average to really pin against the top end of the price, which gives you a very simple, where do I get above? You get above the current 20 period moving average. If you want to be a little bit more patient, wait for a little bit of development here, because that would be like a momentum trade on the daily chart, Frankie.
Yeah.
But if you wanted to wait for a little bit of momentum to stall a little bit, 16 makes some sense here as well, Frank. And so 16, it's above the 20 weekly. So you were talking about additional confirmation. And so you could easily just say, okay, I don't know if I want to just chase this reversal on the weekly chart. Let me see it a little bit of consolidation and then break 16, a little bit, same type of here, 2-day consolidation, break 16. And then you open it up. You got some pockets.
No, you got a pocket to like
You
23,
got some
24.
pockets
Yeah.
all the way up to 23, 24. Now, obviously, we wouldn't say it would get there in one leg, but $20 would not shock me in any capacity on Rivian here. And so I just wanted to put my last one, a little bit of a radar candidate, start tracking whether you're looking at the high base forming against the backdrop of the reversal, you're looking above 16 right now. Just really like the reversal here on Rivian starting to play out before our very eyes. What are your thoughts?
Yeah, I mean, for quite some time now, these guys have been on my bet against list.